It was a negative one for the Australian market with a fall of 0.4%. And ever since we broke that key Fibonacci level, the golden ratio of the 61.8% level at 5,426 points, the market's really been stalling. And today we actually saw a fall in the market. So it does look like the market now looking vulnerable to a short-term correction. Having said that, there were a few bright spots on the market, and one area was iron ore. We saw a jump in iron ore prices on Friday, and that was great news for stocks like Atlas Iron, which was up by 5.5% today, and we also saw Fortescue gaining 3.1%. The other area which showed signs of life was the diversified financials. We saw Challenger Group up by 2.5%, BT Investments up by 3.5%, and Perpetual up by 2%. But all in all, it was a negative one for the market. We saw losses all across the market, every single sector trading down lower, and it was a very light volume day today as well, only around about $2.5 billion worth of stock being traded. So a very light volume day, and we're expecting things to get worse tomorrow with the Melbourne Cup. Even though there is an interest rate decision, the market really pricing in no change at this stage.
What should we be looking for? What are the key things that are going to direct the market? If tomorrow everyone's going to be too busy watching the races, anything else coming up that we can be focusing on?
I guess we are still watching earnings, and we are still getting clues around earnings from different companies. For example, Coca-Cola Amatil today coming out with a profit downgrade, and that was a negative. But on the flip side, some of the economic data is coming in a bit better than expected. So retail sales showing signs of life, and that was one area of strength today. We saw stocks like David Jones gaining quite strongly. In fact, David Jones was up by 4.5%. We saw Myer gaining more than 2%. JB Hi-Fi also doing well, Harvey Norman's of the world. So the fact that retailers are starting to show a little bit more interest in spending money before that key Christmas period, I think are positive for markets. Of course, discretionary retail is a small part of the market, and if we really want the market to run into that Christmas period, we need the materials and we need the banks to be behind the rally. In terms of the material sector, a lot of the focus is on tapering, and I guess the market now pricing in the chance of tapering by the end of this year, and that's been a negative for commodity prices in general. We've seen gold prices falling quite significantly and oil prices falling quite significantly as well. So I think with commodities, you do need to keep one eye on the US and the Federal Reserve and what's happening there. In terms of the banks, we have seen a little bit of a sell-off, but it's been a stellar run for the banks this year. ANZ's up by 34%, CBA's up by 22%, NAB's up by 42%, and Westpac is up by 32%. But I think if you have a look at the banks, one thing that has been keeping strong investor interest in the banks is the falling interest rates here in Australia. In fact, if I can just bring up Westpac's share price, this is just over the last 5 years, and down the bottom I have the cash rate. And if I just try and overlay the two, what you'll find is that when we've seen the interest rate falling here in Australia, it's very clear what's happened to the share price of the banks, and that there's been a very strong inverse relationship. So as the market starts to price in the end of the rate cuts, it might be time to be a little bit more cautious on the banks. Having said that, the dividends do get paid in November, so some of that money will find its way back to the market in December, and hopefully we'll see a Santa rally.